Welcome to the January 14th, 2022 video version of the Wagner Daily. My name is Rick Petticelli, and tonight's video replaces the written commentary portion of our nightly report. Hopefully it serves a nice change of pace as well as offer some insight as to how we set up our charts, what time frames and indicators we use. And as usual, we're going to run through a few broad market averages in tonight's video, and then we'll cover open positions in our model portfolio. And finally, we'll see what's out there in terms of new setups that could potentially be in play over the next few days. Keep in mind that the market is open on Friday, but the 17th, next Monday, U.S. markets will be closed. So first up is the Nasdaq Composite, which after a 3-day bounce into the declining 10 and 20-day EMAs was hit hard. Nasty sell-off. Almost back down to the 200-day MA, so just a one-day move, which makes it tough to establish new shorts after today, as most stocks that were weak probably sold off with the market. So we'd expect the Nasdaq to see some support in this 14,700 to 14,550 area. However, if broad market conditions continue to deteriorate, these moving averages won't hold up. And on the weekly chart, we'd just like to note that this is the second week that the Nasdaq will likely close below the 20-week EMA, which it did for the first time since the rally began last week. The S&P 500 closed below the 50 MA, but is still within striking distance of the average and still less than 4% off the all-time high. Dow Jones Industrial Average ETF DIA is held up really well. Has support in this 358 to 360 area, showing relative strength to the S&P 500 and Nasdaq, but that's not such a great sign for us. Russell 2000 never really got back above the 50, pretty much range bound the past 2 months, no change there. IWP, this is a head and shoulders pattern. Here are the shoulders and here's the head. Broke down below the neckline of the head and shoulders, bounced into the declining 10, and was hit pretty hard on Thursday. And if this is a head and shoulder pattern, the measurement from the head to the low, the right shoulder is 10% or so. And if we just add another 10% to the right shoulder low, and we arrive at around 98. FFTY, like IWP, is a growth-based ETF that we monitor. And it's in a nasty downtrend, bounced for a few days and got hit hard again. So it looks like it's still trending lower and will likely set a new low. ARK, another growth-based ETF, been hammered the past 2 days on big volume and just looks really ugly and will likely continue to trend lower. On to current positions in the model portfolio. We actually just stopped out of F. I raised the stop late in the session and think I might regret doing that. I probably should have taken half off and left the other half on with the stop beneath the low of the day. I did raise the stop though to $24.99. It got clipped into the close. We took profits around $25.50 on a third, and then the market reversed lower and I took the rest off around $24.99, which left us with a 3% gain, which, given that the market fell apart today, was really good to even come away with a profit. So we're out of Ford, and if anyone still owns Ford, maybe put a stop beneath today's low. Microsoft, we're short from 316.89. Just an ugly day. We'll look to cover some of the shares tomorrow morning and possibly hold on to the rest for a test of the 300 or even this 200-day MA. And FIVN, we sold short on Wednesday on a break of the prior day's low and the 10 and 20-day EMAs. And it followed through nicely. We covered some of the position around 127, I believe, about a third. And we'll likely cover another third around 122 and look to ride the rest lower, as long as it keeps on making lower lows and lower highs. So that's it for open positions. There were a few unofficial short setups in last night's report. One was an Okta, which triggered beneath the prior day's low. Facebook, short below 331, closed at 326, and the other was FTNT. There were two entries. One was a short on any bounce to 325, didn't get there. The other was a short beneath Wednesday's low, which it did, and it dropped about 3%. So both of those shorts are looking pretty good. FTNT could drop down to this 295 area. And I believe Okta, pretty much the same target, the prior swing low. And with the market, specifically the Nasdaq crushed on Thursday, there's just not a lot to do on the short side. Most of the higher quality short setups either sold off Wednesday or Thursday with the market. So there isn't much to do on the short side other than monitor current open positions if you have any. As far as longs go, I just don't see any point in establishing new long positions until after the 3-day weekend, and at which point we'd be looking for possible pullback entries in stocks that have shown relative strength. We're talking mostly oils and financials. And one to keep an eye on is CUBI. And this is the one long that could potentially be in play over the 2-day high. Nice little pullback to the rising 10-day EMA. Tesla is one of the last stocks on our growth watch list that was holding up, and it was hit pretty hard, sliced through the 58 MA on a pickup in volume. So unless the price can hold up around this 970, 990 area, looks like it could be headed down to the prior low. So we'll just have to see what develops there. LYFT, potentially in play as a short entry in a clear downtrend, rallied off the lows and stalled just below 50 and has gone sideways, and the 50 has provided resistance the entire time, and it's sandwiched in between the 20 and 10 and the 50 here. We like the tight price action on Thursday, so if the market does continue to sell off on Friday, that could be in play beneath Thursday's low. ANET with a 15% sell-off from basically a false breakout from a short-term pause, bounced for a few days into the 10 and 20 EMAs, took out the prior day's low and closed below the 50. Although the price action didn't fall apart, so it's pretty close to the 50 and could be in play versus the 50 MA as a stop. Look for the price action to sell off down to this prior low. So I'd say it's about 10%. WYNN win is another potential short setup in play beneath Friday's low, looking for the 50 MA to hold. And the final chart of the night is Nail. It's a 3 times home builder bullish, but it's rallied into the 50 and looks like if it takes out Thursday's low, it could sell off back down to this 200-day moving average. It's about a 6% stop versus 12% target, so 2 to 1. Not bad. But as you can see, it's really slim pickings after Thursday sell-off, and most of the stocks that were crushed were software, and which has been really weak the past few months. So just a quick recap. The S&P is in pretty good shape overall, though conditions continue to deteriorate. It could easily join the Nasdaq below the 20 EMA on the weekly. It's still holding the 20 EMA. That's this line right here. The Nasdaq is already broken, lost the 20, it's lost the 10, and possibly in danger of losing the 40. We clearly see this new downtrend or downtrending channel that could be in place. So we could possibly see a break of the 200, a test of this prior low, and then a big bounce from there. Anything is possible, just something to keep in mind. That's a wrap for tonight's video. As always, thanks for joining me, and we'll see you back next week. Have a great weekend.